Yo, 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 yo. What is going on, guys? Good morning. Let me know if you can hear me. I'm just going to try and adjust the levels on the mic just so they're good. But let me know if you can hear me. And let me adjust my position real quick. So, bright and early. Good to see you guys. Bright and early here, at least. I don't know, depending on where you guys are in the world. But here on the West Coast, it's fucking 5 a.m. Oh my God. We're going to get this demonetized immediately. You can't cuss within like the first, I don't know, 8 minutes or something, according to YouTube. So sorry if it was too early for you guys to hear language that inappropriate. What's up, Theron, Danny, Soner, Juan? What's going on, guys? It's a little early. I did want to start it early-ish because the data comes out at 8:30 a.m. Eastern, so 5:30 a.m. West Coast time, right? Is anybody here on the West Coast? This guy says Australia 10 p.m. I mean, that's not bad, bro. Like, Ali, 10 p.m., you get to chill, have maybe a drink, a cigar. You're just laying back right now. It's the end of the day. You're winding down. Watching me is like it's like watching Netflix or something. I wish it was 10 p.m. here. It'd be a lot funner stream. All right. But it ain't. So all right, what are we looking at? Obviously there's gonna be people joining closer towards 5:30, I suspect. But what are we looking at here? We're looking at CPI. Obviously, this is why most of you are here. Although, judging from the questions that I get on Instagram, I don't even know that you guys follow me for trading anymore. By the way, follow me on Twitter and Instagram. And we do have a huge announcement on the live stream because it was something that you guys asked me about the last live stream. By the way, hit that thumbs up. There's only 23 thumbs up and there's 220. Nah, that's unacceptable. Everybody that's here, hit that thumbs up so that people can find the stream. 3 p.m. in Finland. Okay, well, 3 p.m. is not bad. 3 p.m. in Lithuania. Miami, raining. Well, you know what? It was raining a lot here in California, but not so much. Let's talk about CPI real quick. What's expected? And everybody hit that thumbs up. There's no excuse for this. 31 likes. All right. So lazy people taking free content and can't even thumbs up it. Yes, I agree with you, Q. People should be thumbs upping this. 8 p.m. in Singapore. Really? I thought it'd be later. I didn't know you guys were 2 hours behind Australia. Jason, you're in SoCal. All right, man. We're brothers in arms united in the early morning. I think you and I are the only two people that are awake at 5 a.m. right now. All right. Here's what's expected. Okay. Which account on IG is the real one? How does this confuse you guys? Okay. Follow the link in the description. You will see a link to the link tree. The link tree has all of my socials. Follow that to the IG account. There's only one. There's one IG account and there's one Twitter. Okay. Not that hard. Yes, you might get requests from a million other accounts trying to be me, but there's only one, and it's the same link that's in the description. It's not that hard. Just follow it. Hidan, what's going on? Richard, what's going on? Cameron from Atlanta, hot Atlanta, representing. Wow, I mean, you're up early too. It's 8 a.m. in Atlanta, but did you just get out of Magic City or King of Diamonds? Love your videos, love your streams. Appreciate you, Sam. Okay, don't get me sidetracked. Here's what's going on for CPI. Here's what we're expecting. I actually tweeted this out yesterday. A nice, concise summary of what we are expecting for CPI. Okay. This is right here. If you look at this, August 2022 was the last time core CPI came in higher year over year than the month prior. So if we take a look at this and you see core CPI in August 2022, right? Core is the orange one. 6.5 in March, 6.2 in April, 6 in May, 5.9 in June, 5.9 in July, okay? Then August, 6.3%. So we went from July 5.9 to 6.3, right? That was the first time, since March, since the Fed started hiking rates, that was the first time that we saw an increase year over year in core, right? Hasn't happened yet in CPI since June. June was the peak of CPI when we hit that 9.1% CPI. But core, which is what the Fed looks at, and by the way, core just strips out food and energy. So it includes rent, used cars, etc., right? That's the one that the Fed said that they're looking at the most. So we can't even get core to 2%, let alone the headline CPI to 2%, right? So what happened to the S&P 500 when we actually went from 5.9 to 6.3? If you guys look at this, let's go all the way back to August. Does it surprise you that this here was the peak, right? That was the recent peak. So after core CPI actually came in higher than expected, year over year, that was the peak. And when did it bottom? Well, let's go back to that chart. It bottomed. When was the first time since August? When was the first time that core CPI actually then dropped year over year? So we went from 5.9 to 6.3, increasing, 6.3 to 6.6 in September, increasing, 6.6 to back to 6.3 in October, decreasing, right? What happened here in October? It was the bottom. That was the bottom, the recent bottom of the market. So this was when core CPI increased year over year. This is when it finally decreased again. Now, why do I bring this up? Because look at this here. What are we expecting for core? 5.5 is what we got last month. We are expecting an increase to 5.6. Why is that? Because rents are sticky, and rent is a huge factor in core CPI, right? Rent is a huge factor in core CPI. So we go from 5.5 to 5.6. If this holds true, which we will find out in 23 minutes, that will be the first time that core CPI has increased year over year since August 2022. So in my view, if we come in at even higher than 5.6, because right now 5.6 I think is slightly priced in. I don't think it's fully priced in. I still think if we come in at 5.6, you might see a delayed reaction. Remember, the first reaction is not always the perpetual one, the one that sticks. So we might get, a rocket ship today because there might be a lot of shorts and people are getting short squeezed, and everyone's going to ask, hey, core CPI is higher. Why the hell are we going up? Shouldn't the market be decreasing? Recession canceled, etc. So don't take the first reaction. Take it with a grain of salt. We see delayed reactions with this all the time. But I do think that if we're significantly higher than 5.6, that means that the Fed will likely do 25, could even do 50, right? I still think it'll be 25 unless core CPI comes in at like 6%. So if we jump from 5.5 to 6, oh my God. I mean, I think the Fed will do 50. I think the markets will tank. I think yields, these bond yields will spike and treasuries will tank, right? So the yields go up and the treasury prices go down. All right. Let me say what's up to some of you, or all of you, but some of you that actually take the time to write in the comments. How long for the announcement? Noor. God damn it, my boy. I just said 23 minutes, now 21 minutes since you asked. 5.1 today, J-Dub. Oh, and yes. And then headline CPI is expected at 5.1. So that's a huge drop. And remember, headline CPI includes energy and includes food, right? So that's why we're expecting 5.1% drop or a 5.1% year over year in headline CPI. So we got 6% last month, 5.1% this month. So headline CPI is not expected to rise. Core CPI is expected to to rise, right? When you strip out food and energy. But headline CPI, I guess they're saying, I think this has a lot to do with natural gas. By the way, I don't know if you guys are homeowners, especially if you live in the California area. I'm sure it's the same in other states. If you checked your bill like in October, November, December, and you saw how crazy, as a matter of fact, I mean, you could see this if we look at something like, Boyle, and then I will get into the surprise announcement that I promised you guys from the last live stream. I mean, look at natural gas, how it was trading all of last year. Okay, so full disclosure, humble brag, but I promise you that this is important. I have a pool in this house. Oh, actually, you cannot see my screen. 1 second. Here it is. Here's Boyle, right? You could see how expensive natural gas was. Now, I know that this is a leveraged ETF, so take it with a grain of salt, but prices of natural gas tanked. And especially if you live in a cold weather area or you have a pool that you heat with gas was so expensive. Like, I had accidentally left the pool heater on and ran up the bill to an ungodly amount. And I remember calling the gas company. I said, is this a mistake? This has to be a mistake. This cannot be the actual number of the bill. This cannot be the bill itself. And they told me, look at natural gas prices. And then they try to explain to me, because natural gas trades like the stock market. Do you know what the stock market is? I'm like, no, motherfucker, I don't know what the stock market is. Yes, I know what it is. And I should have known what the price of natural gas was. All right. Point is, when you look at this right here, right, this is the reason that we're going from 6 to 5.1 is because natural gas prices keep dropping. And food prices supposedly keep dropping, although you cannot walk out of the grocery store without, like, if you have two things in your hand, that's $50. I was talking to my girl the other day. We were at the grocery store, and I'm like, if you have one thing in both hands, like if you have one thing here and one thing here, like, I don't know, you have toothpaste in one hand and a bag of apples in the other hand, whatever. Pick two random items, right? Pick two random items at the grocery store. If you have two random items in each of your hands, $50 minimum. Food prices have not gone down. Yeah, I agree. I mean, maybe the price of eggs have gone down slightly, but they're no longer $12 a dozen. But food is still very expensive. Food is still very expensive. Let me go and acknowledge some of the donations because we got a couple. Sam206. What's going on, Sam? Donated $5 to St. Jude's. 206? Is that hold on. I know my area codes like the back of my hand. 206 is Seattle or Washington. Or Seattle, Washington. Let me know. Hans Benz donated $20. Thank you so much, Hans. Thank you so much, Sam. I bet Z's girl is fire. She's very beautiful. Yes, I will say this. Stop eating toothpaste. Stop eating toothpaste. I don't know where do you guys come up with this stuff? Restaurant prices also way up. Yes, Richard, but how first world of you to be complaining about restaurant prices when people are complaining about grocery store prices? Some people can't even afford to say what the restaurant prices are because they can't afford to go to the restaurant. Richard, I'm kidding, bro. I eat out at restaurants too. And yes, I concur. Very expensive. Go vegan, mofos. No. All right? I ain't going to go vegan. I'm not going vegan. Shout out to all my vegans. My girl's a vegetarian. I don't judge her. She don't judge me. So, no, I'm not going vegan. Look, Sam206, another $5. Thank you so much, Sam. Thank you so much. All right. So where can I eat? Where can I eat? Where can I watch the CPI report? You're watching it here, bro. This is why you tuned in. We're going to cover it here live, okay? We will cover it. We will even, if you guys don't pay for CNBC, I pay for CNBC. You guys get to watch CNBC for free today. How about that? She is beautiful. Thank you, Jason. All right. How's everyone trading the CPI? Angel. All right. Let's talk about trades. So, people were asking about you potentially opening straddles or strangles. Actually, let me talk about what happened yesterday. So, for those of you that were trading yesterday, we had an insane move the last half an hour of the market, right? The S&P 500. And it's crazy because day traders will call this an insane move. If you're just an investor and you're looking at the market, you're like, oh, yesterday we had basically a 0% day. It was very flat, right? But the kinds of roller coaster rides that we experienced yesterday was insane. So from a day trader's perspective, when you're looking at a 5-minute chart, you're looking at something like this, right? So in the last 15 minutes or last half an hour, when we tank, right, that's a big deal for day traders, because if you were in an SPX 0 DTE contract, because say like the 41, say you were trading like the 4120 contract, right? That contract was probably a few cents, like maybe 10 or 15 cents before this rundown happened, because the market was getting close to the end of the day. We only had half an hour left, and those contracts were out of the money. Those went from, 10 cents to then being over $10 in the money. So just in perspective, it would have cost you around $100 to $200 to get in those. $10 to $20 to get in those, and they eventually made $1,000 or more by the end of the day, right? So that's how crazy those contracts were. That you could have turned $10 into $1,000 on this rundown, right? But how am I trading this? So a lot of people ask me if I'm going to be buying straddles or strangles or whatever. Now, you have to know that a straddle is the most expensive option, right? And if you don't get the let me just pull over my thing here. If we take a look at the let me get it in focus. There. If you take a look at straddles, right, they are the most expensive option. So a straddle on the S&P 500. What is a straddle? A straddle means that you're buying a put and a call. Okay, you're buying a put and a call, and you're doing that to bet on either direction, right? If CPI comes in higher than expected, then you are going to likely benefit from puts. If it comes in as expected or lower, then you're going to be benefiting from the calls, right? But look how expensive it is, because you have to buy an at-the-money call, which is going to cost you $2,100 on SPX, and an at-the-money put, which is going to cost you $1,600 on SPX. So we're talking about almost just shy of $4,000 to buy one contract on SPX, right? And if we don't make the expected move, and here's the expected move in Thinkorswim, if we don't make $39 or a 39-point move on SPX, you will lose that money. So what we've seen, again, on CPI days lately is because there are a ton of people betting. That volatility is already baked into the price. So if SPX does not make 39-point move in either direction, then you are going to lose all of that money. Now, you might say to yourself, well, can I use the SPY? Yeah, you can use the SPY. Still expensive relatively, right? A lot cheaper than SPX. But if you buy an at-the-money call and an at-the-money put, it's going to cost you around $400, right? And if the SPY doesn't make a $3 move, then you will lose all of that money. So you can try your hand at a strangle or a straddle, but the volatility is already baked in. Now, can you make a $3 move on the SPY? easily, yes, if CPI comes in much better than expected or much worse than expected. But we're talking about, in this case, it would have to make almost a 1% move in either direction. That might not be a bad bet, honestly. It is just very expensive. It is just very expensive. It might not be a bad bet, really. Yeah, especially since this is the first time that that core CPI is expected to rise. I wouldn't trade it when the market opens, because obviously we're going to be getting the CPI data in 10 minutes and the market opens in an hour and 10 minutes. Now, what you could trade, and I'm not advocating this because I don't like directional bets. They're just fucking gambles. You could trade TQQQ. You could buy that now, right? You don't have to wait until the market opens. This is a bullish bet on the NASDAQ. You could buy SQQQ, which is a bearish bet on the NASDAQ. I'm not saying buy either one. I don't have an opinion as to what will happen because I don't have enough information about what goes into the CPI. The only two people that know about the CPI today, three people, are the Bureau of Labor Statistics, the BLS, Jay Pitty, right, Jerome Powell, and Grandpa Joe. That's it. And he probably forgot about it already, right? They probably told it to him like 5 minutes ago and he already forgot. So those are the only three people that know about CPI. So I don't like to make directional bets as to what will happen, honestly, without without information, without being able to control the inputs, right? Or at least have a sense of what the inputs are. So, if I had to guess, I don't know. CPI came in really. Do you remember that when Biden came out to talk before CPI last time and said, "Oh, inflation is, we feel good about inflation," right? What did he just guess? Is he just a market wizard? No, it was told to him, and somehow CPI came in right on the dot all across the board. So, Grandpa Joe from Charlie and the Chocolate Factory. Yes, GC, that's exactly who I think about when I say Grandpa Joe. That's exactly who I think about when I say Grandpa Joe. All right. Let me just say that. So last time you guys smashed the like button, right? I said if we get 1,500 likes, and we're at a crazy low 200 likes. Guys, you understand how it works with live streams, okay? Do you want people to get bad information or good information? Do you want people to join other live streams that are subpar, that won't be able to break down these numbers for you, or give you potential plays, or tell you what the implications are to the economy and the market of the CPI, or won't entertain you like the court jester that I am? If you guys want that, don't hit the thumbs up button. But if you want people to find this live stream, and more importantly, you want people to donate to St. Jude, hit that like button. Also, I said if we got to 1,500 likes last time, that I would open up a monthly membership, right? Remember that? I'm a man of my word. So look in the description and you will see a link to the monthlies. Now, I must say, don't rush there and click on it without hearing this first. I must say that this is not, you don't get full access to the academy, right? So you won't get access to the Zoom mastermind calls that we hold regularly every single month, and where it's basically a 2-hour session of learning how to trade options, futures, etc. And it is not, you won't get access to the courses, over 60 videos of courses, also hundreds of replays of mastermind calls. You don't get access to that, but you will get access to the Discord. So you'll get access to the plays, the chats, etc. And the reason that we're doing this is because I know that times are hard and people have asked me for a monthly membership for a while, and I said, hey, what better time to do it than now? So we're only going to be opening it up for a little bit. Likely we'll be closing it depending on how many signups we get, but there's a limited number of signups. The team will be closing it by the end of the week, most likely. So if you want it, there is also a coupon code that you will see there. Coupon code is called CPI is a lie, all one word, and that will get you almost 30% off for life if you sign up. So it's in the description. It's probably the first link in the description. So if you, as I said, I'm a man of my word. You guys hit that thumbs up. You got it over to 1,500 likes last time. There you go. That's my gift to you. All right. Have you ever taken a class for trading, or is your trading self-taught? Guys, 4 minutes until CPI, so I will entertain you and answer your shenanigans. Thank you so much, Alex, for being a part of the trading fam. What's going on, Alex? Have I ever taken a class for trading? So what was that sound? I don't like when I don't know where sounds are coming from. I don't know if you guys heard that. There was something that buzzed from some application. Anyway, I majored in finance. So yes, I took a whole shitload of classes. I took 4 years. I went to 4 years of finance school. Now, they don't teach you how to trade. They don't teach you how to trade. But I did learn. So when I'm looking at when I'm trying to interpret balance sheets and financial statements and earnings, when I am looking at CPI, when I'm looking at bond yields, when I am discussing the relationship between treasuries and yields, like, yes, of course, going to finance school has helped that, right? Of course. But they don't teach you how to trade. No, you don't learn that. Even when you take your Series 7, right? They don't teach you how to trade. They teach you about the mechanics of the market, but you don't learn how to trade. I've said this time and time again, but the best way to trade is to get with people who have already done it and fast track your learning, or else you will be clicking around trying to learn what is the best strategy, trying to learn, you will be YouTubing what is technical analysis, how to trade futures, how to trade options, what is a strike price, what is an expiration date, what does it mean to get assigned on an option, what strike prices should I pick, what is an iron condor, what is a leveraged ETF, what is a stop loss, where should I set my stop loss? There are so many goddamn variables that having people who have done it before work together with you, and you can ask a question from this group at any time. To me, I wish I had something like that. Now, I did have an options trading group at one of my tech jobs. I worked in Silicon Valley for over 15 years. There were a group of developers. There were 4 of us, and we were all into options trading. And we used to share our ideas, our losses, our wins, our strategies. And that definitely fast-tracked my learning, but I didn't have access to anything like this. I couldn't go in and read people's analysis. I couldn't go in here and ask people any question that I wanted at any time. And feel safe and secure that I'm getting good information, right? So yeah, no, I went to 4 years of finance school. I did have experience with a trading group that we started at work in Silicon Valley. But I did not have I started trading in 2000, and I started investing in 2009, seriously, and I started trading in 2010. Right? So we didn't have access to something like this. All right, let us see what is what. I'm going to start these clowns on CNBC so that they can break down. Actually, you know what? Let me refresh this. Hold on. Here we go.
As a matter of fact, if you look at the year-over-year numbers since their peaks, so the peak was in June for year-over-year headline. The peak was in September of year-over-year core. They have been moving lower every single month since those peaks. So that is good news. The bad news, CBO tells us that every man, woman, and child owes $3 grand. We're at 1.1 trillion fiscal year through March, which is well ahead, almost a $500 billion ahead of last year. So spend makes the Fed probably have to stay higher for longer. And the numbers are out. Our March release of Consumer Price Index expected up 0.2% is up 0.1%. High watermark was 1.3. That was in June of 22, the highest since '05. And since then, the lowest has been 0. That was July of last year. If you look at ex-food and energy, expected up 0.4, exactly up 0.4. High water mark, April of 21, up 0.8, highest since '81. Since then, the low has been up 0.2 in August of 21. The biggies now. 5% year over year. That was expected to be 5.1. And the rearview mirror still is 6%. And every single month, as I said, since June when it peaked at 9.1, July, August, September, October, November, December, January, February, now March, have been lower. And if we look at 5.6 to year over year core, maybe the most important number here, here's where it gets interesting, Joe. 5.6 expected, 5.5 in the rearview mirror, gone down every month since September when it peaked at 6.6. This is the 1 month where it popped 1/10 higher, and it breaks that streak. Now, many have said it doesn't need to be linear. I totally understand that. We could look at 1/10, but if you take a bigger picture, we have made progress. But it really does become, and I'm so interested in how the Oracle of Omaha looks at this, it really does now become an issue of spend versus does the Fed tighten? How do they view the banking issues? And what rate is going to be high enough until we know what's going on with the budgets? Yes, go on.
Incredible moves in gold, in the dollar. It all sort of looks like it might give the Fed some breathing room. That the 10 years down,
like a rock.
10 years, futures went, the stock futures went up immediately, gold went up immediately. It all sort of, there's the dollar.
A two-year note is at 392. It's down, 14 basis points? Yes, and we've gone from, we're at 337 now in a 10. That was well over 344. So, Joe, the markets are speaking loudly. I think we need to go back to Becky. At least I'm going to toss it back to Becky. We're all anxious to hear how Warren Buffett's going to respond to the big pop in the futures for equities and the big drop for interest rates. Becky?
All right, Rick, thank you very much. We were listening intently to all of that.
All right, so you guys heard it. Kenan, this guy's so annoying. Santoli's an OG. Actually, let's hear what Warren Buffett has to say. 1 second.
For all of Berkshire was there, and I knew I was leaving town on Sunday night, and Mark says, "What do we do next week?" And I said, "Here's what we do." And on Monday, we always buy Treasury bills. We bought about $2 billion of them. We got a 4.99% bond equivalent yield. But the only question is whether we buy 3 months or 6 months. And I tell him use his own judgment on that. So Monday, I was here, and he sent me a sheet as to what we did. And I don't change anything. Tuesday, he does the same thing. And net, we happen to be a net seller of $300 and some million, but we could have been a net buyer of $500 million in stocks. And I am not going to. I'm going to be traveling tomorrow. He's going to be operating on Wednesday, and I'm not changing any instructions to him. He's going to keep doing what he's been doing. I mean, we don't make our decisions as to whether to own part of a company for the next 20 years. We don't have any idea what anybody's going to do next week or next month. And when I was buying Berkshire between 1962 and 1965 of control, it didn't really have anything to do with it. All kinds of things were happening in the economic markets all the time. But we haven't changed our course, in 58 years. And we just want to buy good businesses. We want to buy people we like and trust and at a decent price. And we'll keep doing that. And we'll keep buying.
All right. So the big news, and yesterday, see, this is why sometimes you got to pull the trigger. Like, honestly, and I said this in my video yesterday, I was waiting to get back into the 2-year. Now, why did the 2-year rocket? Obviously, because the 2-year yield tanked. If you take a look at bond yields, they've tanked all across the board now. And they've tanked. If you watch me, Kevin, you smell like bologna. What is that? Is that like his favorite sandwich or something? I don't even want to know. I don't care. Okay. The treasury yields tanked because now, if inflation is dropping, and by the way, if you guys didn't catch it, with inflation, let me open it in a new tab and we'll go over it again. For those of you that are just joining, we actually got less than expected in CPI. So headline CPI was expected to rise by 0.2% month over month, only rose by 0.1% month over month. Year over year, 5% versus 5.1% year over year. But core came in as expected. As I said, core came in higher. It came in at 5.6%. So core came in slightly higher at 5.6%. But headline came in lower than expected, right? So we're getting trending down inflation in headline. To go from 6% to 5% is probably the biggest drop that we've seen in terms of percentage, I think, since this whole thing started. Yeah, I'm looking at the numbers now. Yeah, it's the biggest drop that we've seen, right? So obviously you are getting, if we take a look here at futures, ES futures up. Can you guys actually see this on my screen? Let me see. Oh yeah, you guys can see this. ES futures are up 0.9%. Those are the S&P 500 futures. NASDAQ up 1.1%. And the Dow up 0.76%. As I said, all treasury yields are tanking, which means treasuries are rising, which means, God damn it, if you guys caught in the academy yesterday, as well as in the video, I was saying that I was waiting to actually get back into this trade. This trade was juicy for us 3 times already, but not all is lost. You miss the initial move and you get kind of this cheaty feeling in your gut. But I do think the 2-year is actually one of the easiest trades to make long term. I've talked about this before. We can go over why that is again. But yeah. Thank you for doing this. Gotta go. All right. Enjoy your time, whatever you're doing. ZP. What was CPI? I just went over it, Rian. Interest rate will go negative. I don't know what you mean. I am game. Fight Meet Kevin for charity? Richard Soren. I don't like to beat up on children, okay? I'm not going to fight a child for charity. I'm just messing. But yeah, I mean, look, if he has boxing experience, of course I would fight him for charity. Of course, if he has boxing experience. If he's not experienced, it's just not fair, bro. Like, it's just not fair. All right, Santoli is a G. Yeah, I mean, he's one of the OGs of CNBC. Wow. What did you guys think of CPI? What did you guys think of CPI? Aditya, where did you learn TA? You know where I learned TA? It's called ST, screen time. Sitting in front of here for thousands and thousands of hours over the course of years. And by the way, it's not static. The way that I trade even 2 years ago is not the way that I trade today. The way that I trade 10 years ago is not the way that I trade today. But yeah, I learned it by screen time. And by the way, we are seeing futures rise, obviously, initial reports for headline CPI being good. But, we still have this to contend with. Is the Fed going to raise rates significantly or at all, because core CPI actually did go up year over year, right? Anyway. What about Tom Nash? I remember your first encounter 2.5 years back. Take him to the boxing gym for a spa session? What does this mean? You guys are so weird. Take him for a spa session? Bro, come on, man. Come on. What does that mean? Core CPI isn't going down at all. I mean, why do you guys use these conclusive terms? At all, or ever, or never? It is going down. It has gone up from last month to this month, but it is down from, the high that it hit of, I think, 6.6%. It is crazy that, now headline inflation is under core inflation for the first time since this whole thing began, right? I think he meant you and Nash has differences of Palantir. Yeah, I know that, at that time I made a video about Palantir and, he made a video. It was all respectful, but that's not what I was questioning. I was talking about the spa session. What is that? What? Why would I do a spa session with another YouTuber? Tristan. Maybe you meant spar. But Freudian slip, hilariously, you said spa. Are you in bullish market now? So no retracement and macro bottom is in. Let's talk about what it means for the market. Am I bullish? I was bullish ever since this happened. Hold on. Let me pull it up for you. Where is that? Right here. Ever since the Fed added $400 billion on their balance sheet and said that they would backstop the banks, right, in their bank term funding program. Ever since that happened, then I said, okay, there's no way that they're gonna let this market tank because the banks were on the verge of collapse, right? And historically, these bank runs would have been left to, well, it would have been a mix, right? Of some would have been bailed out, some would have failed. I think 400 banks failed in 2008, right? But since the Fed decided to inject liquidity into the system, this right here is QE, quantitative easing. Then I'm like, you can't fight the Fed because, as I said yesterday, the market asset prices, the S&P 500, basically are addicted to the Fed. Here, the blue line is the S&P 500. Green is the net liquidity, right? When net liquidity goes up, S&P 500 goes up. When net liquidity goes down, S&P 500 goes down. And now net liquidity is going back up. S&P 500 is going back up. So kind of tough to beat that. But yeah, I mean, I don't know. I wouldn't say that I'm bullish, honestly. But I wouldn't say that I'm bearish either. Could this be the bottom? Could this have been the bottom? Yeah. I think there's a possibility that could have been. Sure. But yeah, what would I need to see to be bullish? Honestly, I would need to see how long the Fed is going to keep those rates up. They said that they're not going to stop until they get to 2%. We are kind of far away from 2%, trending in the right direction in headline, not trending in the right way in core. I wouldn't be surprised to see an adverse reaction due to that core CPI actually going up versus versus trending down. I don't know. At this point, like, I do think that if there are stocks that are cheap, I don't think we're there anymore. I do think stocks have run up in the last couple of months. But if there are stocks that are cheap, as I said before, I do think that you should be dollar cost averaging there. But I don't, if you ask me what's cheap now, really, I don't think that any of the major stocks are cheap. It's a really tough call here. I'm not overly bullish, but I'm not overly bearish either with this happening, right? And when that's the case, I would say that the best thing to do is to just dollar cost average and not care what the market is doing if you have a long-term horizon, and also get in the habit of putting your money in treasuries. I mean, the 3-month treasury is still paying 5%, right? That's crazy. CPI just went down to 5. I know, we just covered it. Captain Obvious. The documentary was very, very nice. Oh, yeah, you're talking about The Age of Easy Money. Yeah. Look at the KSI, money KSI and Jake Paul are getting. I mean, KSI and Jake Paul are on a different stratosphere than a finance YouTuber. What happens to the inflation since the QE has started? Will we see the effects of printing money? That's a very good question, P. Chari. That's a very, very good question. That is the best question that we've got all day. We have not yet seen the effects of this, right? Because this just happened really towards the end of March. So we haven't seen whether this will have effects on the economy or not. That's a very good question. I think it depends on the extent of this, right? Like, if this continues to trend down, there might not be major changes to CPI. But if this continues up, because if you look at the bank term funding program, this is open until March 11th, 2024. We'll see. We'll see. These are very, very tough times to try and predict what will happen, honestly. Yeah. Now, the way that I will be trading is I will likely be waiting for the market to, well, I have to wait for the market to open if I'm going to be trading options. By the way, you could be trading futures now, but I will be, waiting for the market to open, and will likely open an iron condor. So an iron condor, for those of you newbies, an iron condor is basically just opening a range, right? So I'll wait to see what the highs are. You open up a credit call spread at the top, and hopefully that is the top. And then once the price tanks, or if the price drops, you open a credit put spread on the other end, and you make money if it stays in between there, right? So I might do that. By the way, if you guys just joined us, huge surprise, Iron Condor is Z's boxing name. If you guys just joined us, huge announcement that since the last live stream that you guys have been asking for monthlies, check the link in the description. We did open up special monthly memberships that will be selling out and will be closed very soon. Take advantage of it. If you use the code CPI is a lie, you get 30% off, close to 30% off for life, right? And that's going to go away after today. So make sure, if you wanted to join the Discord on a monthly basis, to do that. You will see the link in the description. You get access to the stock alerts, options, futures, the weekly analysis, the education section that teaches you about our recent strategies, changes to our strategies, etc. Obviously, you get to ask anything you want in the chat. What you don't get access to is the mastermind calls and the courses, right? But it is a slimmed down, bare bones version of our memberships, in case you guys were interested. So use that code. Link is in the description below. Iron Condor is the new Drake 21 Savage song. Is it? No, it's not. See, inflation is coming down steadily. People have been way too somber. Don't bet against America. I I don't know that anyone's betting against America if you are trading. That has nothing to do with patriotism. Trading itself is American. Are you an active trader? Do you trade small, mid, large caps? I trade mainly futures and options, all on indices and mega caps. Dixie Pop incoming. All right. So let's look at what the dollar is doing. And by the way, if you guys are on the stream, hit that thumbs up. There's 1,000 of you here and only 400 thumbs up. It's free. It's not that hard. Allow other people to find the stream. Hit that thumbs up. Do you know what happened to the log button on TradingView? Did they update? Not sure what you're referring to, Matthew. Z, are you Albanian? I might be a little too tan to be Albanian, so no. Who said the dollar was popping? Levon said Dixie Pop incoming. Oh, are you just saying because we are at support? GC, I think he's Swedish. That's a very good guess. Yes. Brown eyes, brown hair, brown skin. I'm very Swedish. Treasuries aren't participating as strongly as one would think. Because yeah, I mean, I'm sure that people have, you know. Wait, are you talking about the drop in treasuries? You're saying that the drop is not as much as it should be? Give it time, bro. Treasuries, it's a huge market. All right. I don't see the pop in the US dollar index, but if you're saying that we're at support, maybe, but if you zoom out, take a look at where we're at. This looks like a very, very bearish chart on the dollar. This is the weekly chart for the dollar, right? What do you see here? Whoa, what the fuck is this tool? That's not the tool that I meant. Head and shoulders. Right here. Clear as day, right? You have a head and shoulders on Dixie. I don't know if we're going to get a pop. I actually think that the US dollar is going to drop. We're going to drop. We might get to below 100 soon, right? Especially as inflation continues to trend down. We might get below 100 soon. I'm not a Forex trader, but for those of you that are wondering the relationship between the dollar and equities, when the dollar goes down, equities tend to rally, right? Looks like he's none other than an Indian, Kanchani says. F14 ad, probably Emirati. Wow. You guys, you know what? I the reason that I don't tell you is because these guesses, I love them, right? Like they're hilarious. And everyone I think projects their region onto me. Z lives close by. I will go ask him what his ethnicity is. Colombian. Wow. Palestinian. Wow. Isn't this market pop what Italian and Mexican, Yvonne says? I mean, two of my favorite foods, so I might as well be. Moroccan. If you're Moroccan, blink once. So Sean says, that's a very good guess, I would say. I would say if I was to look at myself from the outside, yeah, Moroccan might be it. Irish, Kurdish. Interesting. Bro, if the dollars are falling, then should I sell some stocks? I live in Asia, by the way. No, the dollar dropping is good for stocks, not bad for stocks, right? The market is going to open in half an hour. Do you guys have any charting questions? Iraqi, Danish, Japanese, come on. That one I know you guys are messing around. Cuban, Armenian, Ethiopian, Navajo. I wish. Navajo would be dope, actually. I did a DNA test. I don't have any Native American. That would be dope, though. Lebanese, 100%. No, I'm not 100% Lebanese. He has a little black in there, I think. Trax NYC looks like your cousin? Who's Trax NYC? Trax NYC? Who is that? Is he a jeweler? I don't know who Trax NYC is. Greek or Egyptian? Wow. Okay. So here's what I expect for the S&P 500 at the moment. Remember that in May, we have the FOMC meeting. When is the next FOMC meeting? Next FOMC meeting is going to be May what? May. Guys, when is the next FOMC meeting? Let me see. Next FOMC meeting is May 2nd. Oh, May 3rd. Next FOMC. Oh, yeah, someone said it. Tristan, thank you. May 3rd, FOMC meeting. He's Black Zillion. That is a group. Black Zillion is a group of MMA. It's an MMA group out of Florida, I believe. Gilbert Burns was part of them, as well as Henry Hooft, who's a great trainer. I do think that 4,300 is in the cards, as I said, for the S&P. That if CPI came in line, then 4,300 is definitely in the cards. Now, what I'm very interested to see is the reaction. What I'm very interested to see is the reaction of core coming in higher. I'm not certain. I'm not certain that this storyline is over and done with. Core coming in higher, right? And as I said, the first reaction is not usually in this day and age is not the one that sticks, right? I'm very interested to see what that reaction is and what the Fed actually does on May 3rd as it relates to that. Because if the Fed says that we're looking at core, let's look at what Fed funds futures are betting. I bet you they're betting 25. Wow, that actually dropped. This is so interesting. Initial reaction on Fed funds futures. That is so interesting. Initial reaction on Fed funds futures actually swung more now. It's still a more of a probability, a 2/3 probability that we get a 25 base point rate hike, but we have more bets in the no rate hike direction. Very interesting. I thought that, obviously this will change as more bets come in, more trades come in, but I thought that this, increase in core CPI would actually move the needle a bit. What is the CPI? I'm late. Rewind the tape. 5% year over year in headline CPI, 5.6% year over year in core CPI. CPI core excluding food, energy, and housing. No, not housing. It excludes food and energy only. What's your view on increased core? Yeah, my view is that it's very impressive that since June, we're now almost running a year. CPI, we've had drops every single month in headline CPI since June, but core CPI is a different story. And someone did bring up whether the extra liquidity from the Fed's balance sheet is actually going to find its way into the economy somehow, right? By the way, guys, if you guys try that coupon code and it doesn't work, let me know. But the coupon code is CPI is a lie. You will see it in the description, in the video description. This is year over year. Last year, this month, it was going up. No, here are the. What are you talking about? This is year over year. Last year, this month was going up. I'm not sure what you mean. Here's every CPI since November 21. That core CPI doesn't matter. Is a jump in the balance sheet is just temporary. Yeah, maybe. Maybe I don't have enough data to tell you. Does the Fed mostly look at core CPI? Yes. All right. I'm going to take a look at some potential futures trades here. Holy shit. Look at this spike here. Huge imbalance here that we have to resolve on the 5-minute. Hard to trade. I'm going to wait until the market opens. Looking at the 3-minute chart. Yeah, hard to trade this here. I'm going to wait until the market opens. I mean, there's a few scalps that I guess you could have taken. But until this is resolved, hard to trade here. Actually, today will be hard to trade, right? So if you are if you are an inexperienced trader, you definitely want to stay out of the market. What was your announcement? Joshua, the announcement was that I said last time, if you guys did 1,500 likes, because people were asking me, open up monthlies. So I said, if you do 1,500 likes on the last live stream, then I will open up monthlies. And we did, and that is in the description. So click that link in the description. Hidan says, that QE is merely a 1-year short-term loan. Okay. It is not the Fed buying any assets. Okay. Hidan. It doesn't matter what it is in the form of. Yes, I get it's a 1-year loan, right? Where did that money come from then? Where did the money come from to loan these banks? Whether it's a loan or they're buying them. Where's that money coming from? Out of thin air, right? It's coming from a keyboard. It's coming from a keyboard just like this, right? That's where the money's coming from. And that money is finding its way into the banks, right? Not only that, but they're not giving out loans based on the current value, the current depreciated value of those treasuries. They're giving out loans based on the face value of those treasuries. Meaning that if a treasury is worth 5K, but its face value is worth 10K before it depreciated, they're giving out loans based on the 10K, not the 5K, okay? So they're giving out more money than those treasuries are worth. And they are doing so at a rate of, here we go, 10 basis points. That's it. So 1-year overnight rate plus 10 basis points, right? So, and they cannot dictate what the banks do with that money. They cannot dictate. They cannot say you can have this money, but only if you use it for XYZ. That the Fed is not a legal or legislative branch. They can only suggest what they want to do. Go back and watch The Age of Easy Money and see what banks actually did with the Fed's money back in 2008, and the Fed couldn't do anything about it, right? So I don't know what's going to happen, but you don't know what's going to happen either, right? I don't know if this is going to go up. I don't know what they're going to use the money for. Are they then going to go out and find, just invest in treasuries and arbitrage this right here, right? This cheap lending here? Because if you're going to give me loans on collateral of face value, that the collateral isn't really worth, so I'm getting more money than the collateral is actually worth, and I'm getting it at a cheap rate, what's to stop me from then going out into the market and finding, arbitraging that rate? Resaid, if SPY retest 411, I will buy a call. Let me see. I mean, we are pre-market. We are at 411. But why you're going to buy a call for what's the, I mean, I guess, but what are your calls dated for? Hidan, you have my ultimate respect. Thanks for acknowledging my questions. I will go back hitting like on all your videos. Appreciate you, Hidan. Thank you so much. Market opens in 24 minutes. 20-year treasury bonds drop from support. I bought put. So far, so good. What did you buy a put in? You bought a put in what? TLT? Hopefully you didn't buy a put in TLT, because when... Well, actually, there's barely any change in TLT. It's a 5-cent change. Here's the thing. The interest rates don't affect the long end of the curve as much as they affect the short end of the curve, right? So if you're trying to play interest rates, you actually want to play short-term interest rates, and mainly the 2-year. The 2-year is the one that is the most affected. If you look at all of these right now, the 2-year is the one that today is actually affected the most out of all of these, right? So the 20-year doesn't really matter in terms of interest rate changes, right? If you look at the 20-year, it's only 0.014. That's why TLT right now is only 5 cents off. So I'm not sure what you bought a put in. Henry, no hate, but bought a put, buy a call. These people are not actual traders. They're just gambling. Why validate them? Well, because we're here to help everybody. That's why. Let's look at the NQ futures. And by the way, do you guys have any questions on charts or options or futures? Treat this like a mastermind. Yeah, I mean, I'm not interested in trading any of this pre-market, honestly. I'm not interested in trading this pre-market. I'm going to wait to see how price resolves after market open. On the EU exchanges, US stocks already went up. Yeah, look at the futures, bro. Futures trade 23 hours a day. They went up because S&P futures are up 0.5, NASDAQ futures are up 0.76, Dow futures are up 0.44. Now, again, I'm not certain that you guys want to hear this guy talk. I'm not certain that initial move that we saw, that spike of almost 1%, is going to hold. I don't know. This right here, I don't think the story is done yet on core going up. I do think that this could trap in a lot of buyers for the coming days. It will certainly be volatile because headline CPI is going down, but core is going up. And the Fed wants core CPI at 2%. before they stop raising, not before they stop raising, but before they actually cut, right? Do you think we'll have a recession? Kanika says. I do think that we will have a recession. I don't know how shallow or deep it will be. Some say that we've already been in a shallow recession. And obviously, the funny thing is, recessions most of the time are hindsight determinations, right? Like the economic, what is it called? Oh my God. The NBER, National Bureau of Economic Research, which is made up of, I think, 8 economists, 4 conservative and 4 left-leaning. Don't quote me on the number, but it's a mixture, right, of conservative economists and liberal economists, right? And I don't mean that in what their views are on bathroom laws or whatever. I mean in terms of their views on public policy as it relates to taxes and spending and et cetera. The NBER usually determines a recession, I think 18 months after a recession actually happens. All right. What do you think about natural gas? I think natural gas is going to suck in a lot and has already sucked in a lot of traders. I think people look at oil and picture themselves getting rich off of something like this because they're like, oh my God, oil used to be $140 and now it's $3. If I just buy it here, I'm going to be rich. Not knowing that oil is, even at these levels, can lose you tens of percentage points every day. But if you actually looked at natural gas and looked historically at natural gas, if we look at natural gas, if we look at natural gas, you could see historically before the pandemic, natural gas was always trading this cheaply, right? Natural gas was always in the $2 to $3 range. And it wasn't until the pandemic and the war in Ukraine that you started seeing natural gas pop up to around $10. So I think people look at oil and they're like, I'm going to get rich if I just buy oil because I'm going to run it from $3 to 140. I mean, look at how natural gas traded before these outlier events, right? So are you concerned about oil and gas prices going up? Not particularly. Based on what? Not particularly, especially if now we are starting to see countries like Iran, subverting sanctions and being able to trade. We're seeing, we have reports of Saudi Arabia selling Russian oil on the market for Russia, right? I don't think so. I mean, I think the normal fluctuations, yes, but nothing too crazy, honestly. Good morning. Woke up late. Was watching the Lakers game last night. Yeah, you and me both. Should I sell my Dogecoins and buy Tesla? I don't know. That's your world. Roman Kachuk, thank you so much for donating, man. Thank you for always donating. Market opens in 15 minutes. Can you trade futures on Robinhood? No, get off Robinhood. It's a Mickey Mouse platform. Are earnings good? Somehow many companies are showing good earnings, but revenues and cash flows are declining. I think earnings are not as bad as people thought they could be. It's still early. We don't know what the extent of holding these rates here for longer are. But yeah. How do you find YOLO stocks? I don't YOLO stocks. I'm not sure what you would classify as a YOLO stock either. I do sometimes, I will trade YOLO options. Like with AMC, how I caught that AMC ride, which I, should have stayed in, but made a nice, I think it was 160%. I just saw it at support, and open interest was still, close to 30%. Not open interest, sorry. Short interest was still close to 30%, and it was finding support here. So I just YOLO'd those calls. But it's really based off of technicals, and if you're talking about meme stocks, short interest. But the short interest and the technicals have to align. Bro, I think this market is going down. Yeah, I mean, give me your thesis. Based on what? Based on what? I'm not really bearish, overly bearish, and I'm certainly not overly bullish. I do think that there are caps for where we can get to. Also, people talk about, some permables talk about all-time highs, but you forget that there are stocks like, QuantumScape was trading at 42. ChargePoint was trading at, God knows what, $50 almost. Neo was trading at almost 70. Palantir was trading at almost 40, 44, right? DocuSign was trading at 320. Give me some more. Teladoc, right? Teladoc was trading at, which I don't know how Kathy still justifies this, being that the pandemic is over and nobody wants to see their doctor over Skype, right? Teladoc was trading at 310 and now it's 26. So, people don't realize that, and I know that a lot of these stocks aren't in the indices, right? So, but it is an overall, like, to get back to all-time highs, I do think some of the high beta names, mid cap, small cap stocks do have to also rise, not get back to all-time highs, but they do have to rise as well. And I don't know that we're just there yet. Now, if the Fed continues to, inject liquidity into the system, sure, right? We haven't really seen the effects of actual QT yet. We haven't seen the Fed actually unravel their balance sheet in a crazy way. It took them 11 months to wipe off $600 billion off their balance sheet and 2 weeks to add $400 billion back. So they're not taking it seriously just yet. So I don't know. Again, it's too hard to call. I'm not overly bullish. I'm not overly bearish. I think that if you find cheap stocks and companies that you believe in the long term, you can dollar cost average in them. But yeah, other than that, I will just continue to trade throughout the day. What is happening to ES? Oh wow, this might be a low risk short here to at least VWAP, which would secure you about 7 points, which is about $350 per contract. And the reason I say low risk is because you could set a stop limit, very close to your entry. So it's about a 2-to-1 trade, maybe more. $20-year is TLT. Is there a symbol for 2-year? 2-year futures is ZT. If you're looking for an ETF, SHI, which is an iShares ETF, is based on the 1 to 3 year treasury bonds. TLT is for 20 years plus, not just 20 years. Cameron, thank you so much for your donation, brother. Appreciate you. PayPal is another one. ZM, Zoom. What are you guys talking about? Oh, yeah, Zoom is another one. Yeah, Zoom was trading at, God damn, Zoom was almost $600. It's not trading at 70, right? And I think did Zoom make it to the S&P 500? Oh, I can't remember. There were talks of it, if you guys remember. There were definitely talks of it. I don't know if it made it. I don't think it did. What do you think about bank earnings? Okay, here's what I think about banks. This is what I was saying. I do think that there might be an opportunity in regional banks, right? Now, this right here, we will eventually break out of this pattern here, right? Now, the reason I say there's an opportunity in regional banks, not because I love them, but because of this. If the Fed said that they're going to make sure that no banks go bust, that they will protect all deposits at all costs, that they have no care in the world for what that does to their balance sheet, then what is the argument against buying the dip on regional banks here? Right? Aside from the all-time highs that we reached of almost $80 on regional banks. And I'm looking at the S&P 500 regional bank index, which is KRE, right? Aside from that, the drop in regional banks because of the bank scares, banks dropped almost 40%, regional banks. So, and we're now at a level that we were back in the pandemic, right? So as I was saying, you know, if the Fed is going to backstop all losses, then who's to say, like, what makes this a bad investment here? And if we take a look at bigger banks, so if you look at XLF, same question, right? Same question. We are now at a low that we saw in February 2021, that we saw in obviously October as well, right? What makes this a bad investment here? I don't know. It's hard not to justify buying the banks. Do you recommend E-Trade for futures? No. Get on a real platform, man. Get on Thinkorswim. If you're not in the US, get on get on what is that called? Interactive Brokers. Janet the Felon Yellen didn't sound like she would protect regional banks. Yeah, I don't care what she said. The Fed, look at the Fed's balance sheet. Shout out to Fidelity, still great. I don't think you can trade futures on Fidelity, bro. Correct me if I'm wrong. I don't think Fidelity has futures. They have options, but they don't have futures. Brother, what's up? What's going on, Doc? How are things over in Dubai? Is Tradeovate still valid? Yeah, I think you can use Tradeovate. Kanika or Kanika, I apologize if I mispronounce your name. What do you think about Bookmap? Not my favorite. I think that Bookmap, like, I don't look at volume when I'm day trading futures, right? And I think that spoofing is a real thing. Spoofing orders is a very real thing. Meaning, oh, see, if you guys had gone short, you would have made some money. I think spoofing is a real thing. I think that market makers can easily throw out phantom orders to make it seem like, for people that use level 2 or volume or whatever, to make it seem like there's more volume than there actually is, inducing people to trade in one way, and then those orders automatically disappear, right? Can you please explain and illustrate how the fair value gap work on the 5-minute and 15-minute? It's the same regardless of whatever. It doesn't matter if it's the 5-minute or 15-minute. It's just an observation method on candles, and it's a 3-candle pattern. This was popularized by a trader named Inner Circle Trader. but certainly variations of this concept, not exactly, but variations of this concept where you have, imbalance, what do they call them? Breakout gaps or whatever, or imbalances. Some variation of this has been around, but I think he popularized this specific definition of them. But basically, you have three candles and you have a huge imbalance and a gap in between, or a space in between, and you just draw in this case, if we're measuring a gap, and by the way, you don't just trade random fair value gaps. So this is obviously, we go into more of this in the Zoom masterminds, into context, right? Like which ones to take, when to look at fair value gaps, blah, blah, blah. But basically, you are looking in between three candles and taking the top of one candle and the bottom of the other candle, and that is your gap. Now, if three candles don't have a gap in between, like say here, right? Like these three candles here, then there's nothing to draw in the way of fair value gaps, right? Like between these three candles, you can't draw a fair value gap. There has to be space in between the two outside candles, right? So like in this case, you have one here, right? In between this and this candle, you have this, and this is the fair value gap. So it's meant to look for imbalances in between three candles, because the concept basically says that the market will go back and address those imbalances eventually, right? Especially if they're wide like this, which is why I was saying, if I was trading, I would likely take this short here up until at least VWAP. What do you think about UPST? In what sense? I don't have thoughts about UPST. Where's the shirt? What shirt? This here? I'm wearing a shirt, bro. What time frame you looking at? This is the 5 minute. Went on a crazy motorbike ride, S1000RR. Bro, I love that bike so much, man. Yeah, I definitely want to ride that in Dubai, man, for sure. Do you believe we landed on the moon? You mean in 1969? I don't know, bro. That one's a little fishy. I believe we did go to the moon, but during that specific time, Apollo, what was it? Was it Apollo 11? I don't know. I think the Fed gave the banks a bailout, but I also think there was no other way to instill confidence. Valid. Powerball. Valid. CPI was terrible. I don't think it was terrible, Tyler. I think people want it to be terrible because they want to crash because they have puts, and they're baffled by why the market keeps going up and crashing their puts. I don't think CPI was terrible. I think people want it to be terrible. Cope. Yeah, exactly. You see this in the market a lot, right? Like I objectively, like I said, I sold a lot of stocks that I bought in October, right? It was February 6th or 7th when I released that video. It was right around here. Trust me, like if there's, would I rather be fully invested in the market if it's going to go up? Yeah, but I'm also not a jackass who's going to lie to myself. CPI was not terrible. Um, whoa, that was loud. None of you are CPU experts. I mean, yeah. All right, bro. This market is very unhealthy. That means nothing, Tyler. That means absolutely. Your opinion is just an anecdote. That means nothing. The market will do what the market does, and it is your job to plan around that. Am I overly bullish? No. Am I overly bearish? Not overly. No. I'm extremely neutral here at this level, right? I need more. I will change my tune or alter it once I get more information, right? Can you see today's market dropping? Yeah, I can see anything happening today. Guys, please no thoughts questions. I don't think anything of QBTS or charge point or whatever. If you have a more poignant question, let me know. Got to print the what TF shirt. Oh yeah, that shirt. That shirt's definitely coming out for sure. Could I see the market drop after the initial run up? Yeah, I could see that. Sure. I can also see it spike to 2%. Sure. I could see both things happening. What is going on here? Oh, the SPX. I'm like, wait, the futures just spiked? There you go. There's your short to VWAP. Right? Say you could short this here to VWAP, quick 7 points, $350 per contract. Merry Christmas. Would I stay short here? No. I would have exited the trade waiting for the next setup. Do you think Green Day is cool? The band? Yeah, I like Green Day. Is core an outlier here? What do you mean? Is AMC a buy? AMC is a trade. It is a rent. It is not a buy. And you're getting in kind of late. EVs are undoubtedly the future of the automotive industry. What is the best way to get exposure to EVs? Charging? Buy companies that you think will be healthy in that space. Tesla was 75% off a few months ago. This market is following Japan's 1989 market perfectly. Okay. The market seems to totally ignore that the labor market is extremely tight. Well, I think, Alex, it's not the fact that it's ignoring it. It's the fact that this is coming down while the labor market is tight. So I think that the market is looking at a soft landing scenario as more probable, right? Which is why there was a disconnect between the bond market and between the stock market, right? We have stagflation in a recession. Not good. I mean, all right. The thing is, I think people really want the narrative to be something, and they're trying to convince themselves later, right? They didn't buy stocks, they're waiting on the sidelines. Even all throughout October, they're waiting on the sidelines. They had no idea why they were waiting. They don't know what they were waiting for. The market's already down 30%. They don't know when they're going to buy. They just know that they're just hoping the market keeps dropping, but they were never going to pull the trigger. And now the market has rallied. A lot of stocks are up 100%, and they want things to be bad because this doesn't make sense to them because they didn't get in. But I guarantee that if you looked at this point here and said, we're at a 50% retracement of the previous bear market and you got in here, you wouldn't be wishing that the market tanked, right? You're only wishing the market tanked because you're not in it. To be honest, like I'm here to give it to you straight. And I've seen all kinds of personalities in the market over the last 20 years. And that is a very prevalent one, where people are in disbelief that they can't believe what is going on. They want the market to drop so bad, so they start spewing out these things. 1989, stagflation in a recession, blah, 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 right? Ignoring the fact that, and by the way, I'm not overly bullish. I'm just calling out that personality type that is being hyperbolic about what is going on, because they really want the market to drop. If you bought here, you wouldn't be wanting the market to drop. Just think of that, right? So think about this stuff objectively. So here's the way that I see it objectively. I'm in the market will tank. If you really believe that, then you're not in the market. You're either tepidly in the market, but you're not fully invested. If you think the market will tank, why wouldn't you sell your stocks? If you really think it's going to tank, right? So here's my take, right? I'm comfortable enough to tell you I don't know. From here, I'm not overly bullish. From here, I'm not overly bearish. From here, I said this was a good buy point regardless of what happens. And the market did rally from there unexpectedly. I didn't expect it to rally that hard, but it did. I didn't expect the Fed to come in and do this, but they did. I didn't expect the Fed to, to basically put assets on the balance sheet in the form of $400 billion in 2 weeks, but they did, right? So I'm looking at market conditions and adjusting on the fly, right? For me, when I looked at in the beginning of February, when I sold those stocks, I didn't see a reason for the market to keep going up significantly. And there was more uncertainty than there was certainty. So that's when I let go. I wasn't overly bearish, but I was definitely not bullish. And if inflation can, if core continues to trend up, if core continues to trend up, right, in the way that we saw in August, it trended up for 3 months. From July to August, August to September, and then September to October was the first time that it dropped again. If core continues to trend up, the Fed will have more hiking to do, and they will keep the rates there for longer, and we won't see a cut, right? So that to me is the story. 4,300 at some point in the near future. We have 3 weeks left between now and FOMC. That is definitely doable. I'm not going to say it's impossible. Right? So if the Fed is backstopping all banks, so we don't have a risk of banks dropping, right? Do you agree? We don't have a risk of banks dropping. CPI is dropping, right? Core CPI came in higher than expected. Sorry, not higher than expected. It came in higher than last month, but that was expected, right? That it would come higher than last month. What is going to tank the markets? What from here is going to tank from now until the next FOMC, where Jerome Powell can come in and shake things up and say, screw it, we're doing a 50-point rate hike, right? What is going to tank the markets from now until May 3rd? Would you be more surprised if the markets tanked or if the markets made it to 4,300? Honestly. And the markets could trade sideways. I'm not claiming to know the answer. I'm just saying what is plausible, right? What I think could happen if rates continue to stay higher for longer is that we will get more cracks in the system that could come along the way, whether it's in the summer or the fall. I don't know. Nobody can tell you. And I can tell you this one thing. It's never in the sector that people think, right? So people look at, they'll look at things like credit card debt or, car loan payments or housing. And they're like, oh, shit is so expensive. I bet you that the defaults will start happening there. The thing is, with Fed rate hikes, it's never never the obvious sector, right? So nobody saw the regional banks cracking like they did because nobody was paying attention to how idiotic of a risk they took by keeping these expiring treasuries on their balance sheet, right? So yeah, all of a sudden banks start folding, and we're like, wait, what is on your balance sheet? You didn't hedge the risk of these treasuries dropping on your balance sheet? And that's where the risk was, right? So it's not going to be that obvious. There's going to be some sort of corporate credit event or consumer credit event or both that is not that obvious that ends up cracking under the weight of these rate hikes. So I don't think that is implausible that at some point that will come if the Fed keeps the rates above 5%, from now until Christmas. We need Paul Volcker. I mean, these are the fastest rate hikes since Paul Volcker. Like Jerome Powell is doing something that Yellen didn't do, is doing something that Greenspan and Bernanke didn't do, right? Bro really disclosed his worth. Mike, who are we talking about? Gashi. Hey Z, I was there and these guys are just emotional. I wish my emotion would be where you are. Also, I wish you have found you years ago. I might have made millions today. I don't know. Trading is, I mean, I appreciate the kind words, but trading is a lot about psychology, right? It's more psychological than I said this on Twitter, by the way. Follow me on that was the short, boys and girls. That was the short. I would have exited at VWAP, not gonna lie, but it's continuing to drop below. But it is addressing this imbalance here. It is addressing this imbalance here. But that short was the short. Congrats if you took it. Yeah, trading is more psychological. Like I said on my Twitter, follow me on Twitter, by the way. But like I said on Twitter, it can't be that you are wrong. Like if you're a losing trader, and I'm not talking about you gashing specifically, I'm talking about traders in general. If you're a losing trader, it's actually implausible that you're guessing wrong all the time or taking the wrong trades all the time, right? That's actually implausible. It's really how you are managing your position. That's all it is. So holding losers too long and letting go of winners too fast is a huge symptom, for instance. That is one that I see quite often, right? But it is more about psychology and execution than it is about picking your trades. Z, when you trade options, do you perform TA on higher time frames, but watch the 1 minute chart for your entry and exit? I do. I do TA on every time frame. I'm basically trying to tell a story. That is why I flip through different time frames. Someone's asking about Nvidia, which we have a call credit spread on Nvidia, the 270, 265 call spread on Nvidia. Let's see. All right, that's back in the green. Hidan Z, great call for short. Yeah, appreciate you, man. Tyler, that's, I do have a short on Nvidia. We shorted let me actually pull it up for you. By the way, if you guys want access to our trades, we just opened up monthlies by popular request. You will find that link in the description. The 265, 270 call spread on Nvidia. That's what we have open. Expiring April 21st. So max profit is 275 per contract. Max loss is 225, right? So, yeah. Tyler, shorting Nvidia is dangerous. Sure, buddy. Maybe we can close this out for profits now. It's not dangerous if you know what you're doing. A call credit spread is a max, is a capped strategy, right? But yeah, in terms of time frame, I went over this in the last mastermind call. I went over time frame. When did we go over time frame? That was in the March call. But yeah, how to determine time frame was one of the topics, one of the voted on topics. And so we went in detail for hours on how to determine time frame for trades, right? For successful day trades. But I'm basically trying to tell a story, and if I can't find that story on a time frame, then I'll switch time frames to see, to be able to determine my entries and exits. So yes, I will look at the 4 hour to see what, or the 1 hour, right, to see what the my daily bias is, and I will try to trade with that trend if there is a trend to spot, and then I'll look at the 5 minute for entries. If the 5 minute is not granular enough, I'll look at the 3 minute. If the 3 minutes not granular enough, I'll look at the 1 minute. It really depends. Wow, that short was fucking amazing. I hope you guys took it. God damn it. Hey. That short was amazing. I really hope some of you guys took it from that level. With proper risk management, nothing is dangerous. Exactly. Why spy down even after good CPI? Manu, as I said, the initial reaction is not necessarily the one that's going to stick. And by the way, this is not necessarily going to stick either, right? It really depends. Like right now, what I'd be looking for, I would have exited my shorts, in full disclosure. I'm not going to act like I was a boss and would hold it all the way down to here. I would have definitely exited it at VWAP, and would not have re-entered on this leg down. But what I'm looking for now is to see if this right here gets taken out, and how it gets taken out, right? If we see a huge wick into here, here I'm giving you my trading strategy. But if I see a huge wick into here, and then we go back up and break market structure, right? Then I will look for a long off of the retracement. If not, and we continue to break below this, then I will look for further shorts off of a retracement back up. Hopefully that makes sense. Any book recommendations on trading market? No. Get a trading view account and put in the screen time. No book is going to teach you what screen time will teach you. What's that short risky considering it was very close to market open? No, because you're trading futures and you can set a stop limit. And as I said, back when I was looking at that short a few minutes ago, I said you could set a stop limit, and I actually have the orange line was where the stop limit would be. You could set it right next to entry. Okay, the market is melting up. Simple as that. The market is actually dropped. Tyler, what are you on, bro? CPI was not good, bro. Less than expected. Doesn't necessarily mean good. Okay, what is good CPI? I think folks want to see it at zero, and if it's not zero, then they're going to scream that CPI wasn't good. There is no good and bad. This isn't the Avengers, right? You're trying to look for trends. Is CPI trending down? Yes. Now, core CPI trended up. That is not necessarily what the Fed wants to see, right? And that's why I was saying that is not yet. I don't think that story is resolved yet. This increase in core CPI. I think the markets will, and the bond market and the stock market, bond market more so, will actually tell you what they think of that. And now you can see that the short-term yields, the 2-month, 3-month, 4-month, have actually turned around and are now increasing. And that might be due to that core number, right? Is it a good idea to snipe quick using call put based on market movement? If you're asking if it's a good idea, don't do it. Because if you are a day trader, you're not asking if anything is a good idea. You are looking at the chart and making determinations, and you know how the things that you trade move, right? There are no good or bad ideas. It's, do you know how to trade or not? If you don't know how to trade, then trying to day trade with real money before getting the experience is a bad idea, regardless if you're doing it with options or futures. Hit 40% on that short and 70% on my runner. Good shit, GC. I'm glad one of you took the trade. I definitely didn't take it. That is the trade I was looking at, but I'm glad you did. Do you watch the Best Ever Food Review Show? Yes, I love that channel. That's one of my favorite YouTube channels. Along with Bald and Bankrupt is another one of my favorite YouTube channels. How do I get access to the mastermind calls? Hit the link in the description. Actually, is it in the description today? Let me see. Maverick of Wall Street. Don't know too much about it. From what I've seen, not my style. But I honestly don't know that much. If you want access to the mastermind calls, and we're doing a mastermind call this weekend, by the way, make sure you use this. Who was asking me? Best of the best. Best of the best. Make sure you use that link and book a call. And if you are accepted, you will get notified shortly after you apply if you're accepted to the mastermind calls. We try to keep the classes small, but you will know. So click on that. Thoughts on the show Wall Street Warriors? Have no idea what that is. Core CPI is the most important. According to the Fed, yes. According to the Fed, that is the one that they look at the most. Yes. All right. So market, honestly, if we take a look at the market as a whole, let me pull up the it's pretty muted, right? And this is what I was saying. If you buy a straddle, you would get utterly raked with a K, RAKED. Okay. I didn't say the other word, but you will get utterly raked if you bought a straddle, because we had a very muted move. As I said, the S&P would have had to make a 1% move just for you to break even if you bought a straddle. And we're now at 0.2, right? So a very muted move. Yeah. Any thoughts on Moomoo platform? Guys, okay. I want you to imagine this. NC rocks. Assuming that your father is still with us, I want you to call up your dad and tell him, Dad, I recently got into trading. You know this thing that you guys used to do in the 80s? I recently got into trading. Be like, oh, that's great, son, or that's great, daughter. What platform are you using? It's called Moomoo. What do you think your dad would say? Honestly, what do you think your dad would say? If I told my dad that I was trading on a platform called Moomoo, he might hang up and he wouldn't talk to me maybe for a week or two. Okay? Get off these Mickey Mouse platforms. You have real platforms to choose from. Tyler says my dad would disown me. Buffett says he would say, Buffett says he would say, I'm not your dad. Exactly. Corey Larson says, do you get free milk with it? Exactly. Y'all are fucking hilarious. R. Jackson says, my dad would take me out to the pasture with the rest of the cows. Jeremiah says, Moomoo sounds like a platform on the dark web. Oh my God. But seriously, get off these Mickey Mouse platforms, right? Like, get on TD Ameritrade, get on Interactive Brokers. All right. Badra says, would you still buy the Iron Condor? I hope you mean sell. I wouldn't buy the Iron Condor. I would sell the Iron Condor. Would I do it here? Oh, interesting. Bitcoin is down. I can see why that is. I mean, if CPI came in lower than expected, I can see why Bitcoin would be down. But it's down slightly. It's only 0.5%, so it's not really, really down. I would sell the Iron Condor. I was hoping that, market open, we would get a move up to this level. If at 9:30 this was the move, yes, I would sell the call spread of the Iron Condor up here. But by 9:30 we were already down from the top of the day, from the high of the day. So I would likely wait until this level here, see how we react to this level. If we don't get taken out, if we wick into this level, then I would likely sell the put spread first, and then wait for a rally to sell the call spread. All right. Good point on the condors. Pros and cons with legging in and out of the spread. You want to leg in and out of the spread. And guys, if you're on the stream, hit that thumbs up, please. It helps people find it. But you want to leg in and out of the spread. You know why? Here's why. When you're trading Iron Condors, and you would learn about this in the options course, which you get access to if you sign up to the mastermind. Click that if you want to apply to the mastermind. But I just put it in the chat. But you want to leg in an Iron Condor if you're day trading, because when the price goes up, right, the premium for call spreads goes up, right, because calls go up when the price goes up. So you want to sell calls and get the most for your money when the price finds a ceiling. If you try to sell a call spread here and then the price goes up, that call spread is going to increase in premium, meaning you took less, meaning you'll be underwater on that call spread, okay? You will be underwater on the call spread. So essentially, you want to leg in an iron condor when you're day trading it, because you want to be selling the call spread for the most money. That's when the price hits a ceiling. And then you want to be selling the put spread for the most money. And that's when we hit a floor, right? So legging into an iron condor makes sense. Like if you sold the put spread here on these wicks, right? And you would obviously give yourself cushion and sell it below. But if you sold the put spread here, you would get the most money. If we saw a bounce to the upside to retest near these highs, then you would sell the call spread. So you're creating an iron condor separately by selling the call spread and then, or selling the put spread first at the lows and then selling the call spread at the highs, or vice versa. That's why. If you just sell an entire iron condor here, only the put side, as of this price action, only the put side is going to give you the premiums. The call side you'll get nothing for. And then once the price, if it does retest here, you're going to be underwater on that iron condor. I can't believe the economy is withstanding these rate hikes. I mean, yeah, it has to do with the tight labor market so far, right? Once that starts cracking, that's when everything goes out the window and starts unraveling. But as I said, the initial move is not the one that's going to stick. So please keep that in mind. Those of you that bought puts yesterday, and I have good friends that bought puts, a good friend in particular that bought puts. And I was telling him, probably don't want to do that before CPI, but thankfully, hopefully he didn't close them. I got to check in with him. Hopefully he didn't close them at the top of the day, but certainly once the price started dropping, you can close those out. Optimal long on ES, not yet. As I said, Mickey, what I would wait for here, it looks like we're taking liquidity, right? You can see that by these wicks here. We're taking liquidity near the lows. We resolved this entire imbalance, sorry. We resolved this entire imbalance. So this is now addressed and mitigated. So we don't need to worry about that. And what I'm waiting for is for us to break market structure if I'm going to long, right? I'm waiting for us to break market structure, which would be here. Break structure and then come back to retest an imbalance. And that's where I would take it long, right? And target these highs of the day. But so far, a pretty muted move on CPI. I mean, we had the initial pre-market reaction. But again, straddles or strangles would have got crushed. How long have you been trading? Seriously, since 2010. Investing since 2009. In the markets, tracking since 99. Break structure, retest, and then go long. Yeah, and you want to use tools for retest. So, again, this is something that we go over in the academy. But for instance, you would use something like the Fibonacci tool, right? So, if we break here, for instance, right, we break structure and retest and say this is the high, then you would use the Fibonacci tool, and you would, whoa. That's pretty scary that I got it accurate like that. You'd use the Fibonacci tool, and you would, if you're not into fair value gaps or whatever, you could use the Fibonacci tool to trade off of, say, the 0.5 or the golden pocket as your long, and set a stop limit below your entry, right? Don't need. I feel like I'm looking at the wrong ES on TradingView. You're not looking at the wrong ES. You just haven't paid for real-time data. So you have to pay an additional $4 a month. And you cannot trade without that. So do not try and trade futures on delayed data. You're too young for that. I'm not. No, I'm pretty old, fam. But I appreciate it. Can you really make money trading? Yeah, of course. Can you make money easily trading? No, of course not. Are you an 80s baby? Yes. Thoughts on NVIDIA? Thoughts on prayers? Ask me a more specific question, please. How do you trade the 2-year if the difference is a few dollars, or must it be through options? Futures, not options. So I trade the 2-year, the ZT 2-year futures. Z, how are you 25 with gray hair? Because I'm not 25, bro. Would you long or short altcoins at the moment? Not interested in altcoins. I don't mind stuff like Solana, but in general, I'm not into altcoins. I think Bitcoin is a lot easier and more liquid to trade. Richard, gotta head out. Thanks for having. Appreciate you, man. I'm gonna head out soon too because I want to trade. But yeah, we opened up monthlies for you guys. Hit that link in the description, and it will take you to our page. If you use the code CPI is a lie, you will get 30% off for life. But it is basically this right here. So hit that link in the description and you will get access to the monthlies that we finally opened up for you guys. Earlier, you mentioned something along the lines, if the dollar goes up, wait, if the dollar goes down, stocks go up? Yeah. If the dollar goes down, stocks go up. Yes. Can you further explain? What do you mean? Can I further explain? When the dollar goes down, stocks go up. Yeah. What do you think about Tesla? I like Tesla at 100 or 101. I'm only interested in futures and day trading, not options. Does your monthly go over your futures trades? Yes. Most of our trades have been futures trades. These are all futures trades. So yes, this whole channel is futures trades. Z, you're doing monthly memberships again. Guys, check the link in the description. Yes. Yes, that is going to go away. CPI is a lie. That is the code, and that is going to go away after today. So yes. Z, how do you feel about shawarma for lunch today? Are you around? Yeah, let's go. When trading futures, is it basically like trading with margin? No, margin is an element of trading futures, but margin does not mean automatically that you're trading futures. But yes, you need a margin account. What is the tick size of the Z? So it is 1/8 of 1/32nd is going to be near $8, right? So it's about $64 for every eight for every 8 move, for every 8/8 of a move, right, is roughly $64. And then, you know, it's 1/8 of 1/32. So if you look here, for every tick, right, it's moving up 1/8 of 1/32. And then every 8, you move up 1/32, right? So if you multiply 8 times 8 times 32, that is the tick size of one full point move in ZT futures. How do you make money if it moves from 103 to 104? That's a full point move. You're talking about $1,000 for a full point move. What is your win-loss ratio? Right now, we are averaging over 80% win rate. Now, obviously, win rate is not the same as how much money you are going to make, because win rate only determines how many actual trades you won and not what is the RR of the trades that you won. But yes, we're over 80%, in the low 80s right now. Can you box clear value tax? All the profits go to my bank? I don't know what that is. How do we get one Zoom call? How much would a one-time 15-minute Zoom call be? Random card breaks. I'm not a prostitute, bro. Either you join the academy or you don't. You can't take me out for 15 minutes. Do you balance the amount of trading you do that is just cash generating and expanding your portfolio, or are you more focused on cash generating trading such as futures, options, etc. currently? Yeah, no, my investment portfolio I've been running for 15 years now, right? Consistently. So yeah, I continue to add to that. What I do is when we are at a point where I'm comfortable buying, what I do is I will take trading profits and put that into, say, the SPY or VOO or something like that when I feel comfortable buying. Right now, I don't feel comfortable buying the SPY at 411, but say we got back to like 380 or 375 or something, I would take those trading profits, buy stocks for the long term. And you don't have to really separate out your stocks. You could just buy the indices and put that into my long-term portfolio. But yeah. It says no Zoom calls. Yes, for the monthly, you don't get the Zoom calls. If you want the Zoom calls, join the academy. Well worth it. And you also get every single recording to track back every single course that we have. Click that link right there in the chat if you wanted the Zoom calls. Yes. Book an appointment. If you are approved, they will let you know. Do you like $1,000 account challenges? It would be good to learn. I mean, our entire academy is an account challenge. Richard Soren, I'm a member of the academy. It's well worth the investment. Great resource. I'm learning a lot at my own pace. Appreciate you, Richard. 80% win rate is great. Are you making money? Yeah, because our RR is always, we're aiming for 2-to-1 RR, but it's never less than 1-to-1. So yes, if you just had 1-to-1 RR trades, you only need to win over 50% of your trades to be profitable. All right, guys. The trading is looking too juicy at the moment. And I missed one huge move already. And it looks like we are getting into potential long territory here as well if we break market structure and retrace. And I definitely want to get in this long. So I'm going to get off and trade with the Discord right now. Again, those monthlies are open, so sign up for those monthlies. CPI is a lie, get you 30% off. You can join our trades that way. If you want access to the masterminds, we're doing a mastermind this weekend, then click that link that is in the chat, book a call, book an appointment. And if you are approved for the masterminds, you will know. But I'm going to hop off and trade with the rest of the crew at the moment because it's still early and I want to make money. So I will see you guys. I gave you guys the free short. If you guys took it, good job. And now I'm looking at a potential long as we have clearly taken liquidity here. And if we break market structure, come back and retest, I will long for sure. But yeah, hit that like on the way out. GC, you're a real one. Thank you guys so much for the donations to St. Jude. Appreciate you for hopping on these live streams always. CPI is a lie, get you 30% off. That link is in the description. And I will see most of you in the academy. For those of you that are not, I don't know why you wouldn't be, but if you ever decide to join, I will see you there too. If not, I will catch you on the next live stream. And keep an eye out for the upcoming videos. Also, follow me on Twitter and Instagram. I do daily trading, finance content on there as well. See you guys. Thank you guys so much. Stay safe out there. Peace.